What is going on, everyone? Happy Tuesday and welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts today. And today, like every day, we're coming at you live from our studio here in Las Vegas, Nevada with our daily. We've been only talking about FTX live shows. Before we get into the content, I'd like to introduce you to your other co-host, Big Rob. What's up?
Hola! It's your boy Big Rob back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we're an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information. We package it up in a fun and sexy way. Yeah, no shortage of news. I'm telling you, every time I turn the corner, it's like something else is dropping. Some other exchange or company or VC firm either goes under or is on the brink of it, or perhaps just a celebrity that you don't even expect weighs in on this whole situation. And then all the while, you got Bitcoin sitting at 16,000. I feel like Bitcoin's at 16,000, and we've talked about the price of Bitcoin for all of a couple minutes in the last week, right?
And a half.
Yeah, it's like, hey, Bitcoin's at 16,000. Whatever. Yeah. More important news here. It's crazy.
Yeah, so we have there's a lot to uncover today. We're going to give you an update on FTX. There's the largest Japanese exchange just went under. The first ever crypto lending platform is now under as well. We also have some allegations. If we get to it, we're going to talk about Polygon Matic News, a big partnership with them. But of course, today's focus is going to be on FTX, the fallout, the contagion. So without further ado, let's talk about what is this exchange that went under? Well, FTX owned crypto exchange Liquid, which is the largest in Japan, has halted all withdrawals, which you guys should be pros at this. You know what this means. That means they're donezo. Japanese cryptocurrency exchange Liquid is the latest company to halt withdrawals amid the ongoing crisis of centralized crypto exchanges. This is a quote from them. Due to the Chapter 11 filing by FTX Trading International, the ultimate beneficial owner of Liquid Exchange is halting all withdrawals, both fiat and cryptocurrency. The news came shortly after Liquid claimed that customer assets on Liquid wallets were not impacted. So we're seeing a trend, man. We're seeing a trend, and that's why we said yesterday, I don't care who it is. If they say something, assume the opposite. If Brian Armstrong comes out and says everything's fine on Coinbase, assume it's not fine. If Crypto.com comes out and says we're back 1-to-1, assume they're not back 1-to-1 until proven otherwise. I mean, you had just a tale as old as time. People coming out trying to stop the fear of the contagion, and nothing is going to stop it. Nothing will stop people from pulling money off exchanges. Too much has happened in too little time. And so there's another example. Guy comes out and says, "Oh, everything's fine, guys, we're fine." And then what? 3 hours later, they stop withdrawals.
Yeah. Well, the thing is the writing was on the wall. I think everybody kind of knew that, or anybody with insight onto the portfolio of FTX International. So FTX had their base exchange or their base company. They also had FTX.US. And then this was basically FTX.Japan, I guess you could call it. But instead of calling it that, it's called Liquid. Now, FTX.US, in comparison, was built specifically for U.S. customers. Liquid was purchased through FTX, so different backstory there, but kind of the same premise, or at least the same idea between FTX.US and this one. But this does not discount the impact this is going to have. I mean, you have, I'm sure, hundreds of thousands of users. I don't know how many number, I don't know the number of it, but I'm sure there's tons of people locked out of their account that now have their bank accounts go to zero. And what we've seen is that perhaps the retail investor a lot of times can get their money out fast enough. If you have, say, a bunch of Cardano, or you have, a quarter of a Bitcoin, and it's sitting on an exchange, sometimes the retail can get out when they smell a problem, or when there's smoke, you can get it out in time. Who normally doesn't get their assets out is venture capital and institutions, because it's such a large amount and a process to go to withdraw funds. And so we saw it with the venture capital here, and with the FTX drama, most of them couldn't get their money out. Skybridge Capital, You had all the funds for Kevin O'Leary. Got a lot. He basically went to zero on everything that he had. I mean, he was also a shareholder in the company as well. But I don't know, man. Another domino to fall.
So this exchange was founded in 2014. 2014, FTX acquired that entire group in February of this year. So again, you might not have heard about Liquid, but people in Japan definitely did, as it was the largest exchange. And I'm assuming, and I don't have facts to back this up, they might have been the first. And so when we talk about this thing is not over, we mean it. This thing is not over. And so when people keep saying, oh, FUD this, FUD that, it's not FUD, right? You'd rather be ahead of it than be like, oh my God, get an email, get a notification saying, oh, your withdrawals have been halted. Would you rather be in that position? Would you rather be maybe a little over?
Yeah, I don't care if the founders of these exchanges look at our channel and they're like, oh, these guys don't know what the hell they're talking about. And I don't care if the homers that are delusional and that want to keep their money on the exchange think we're spreading FUD. You know what? I'm just relaying the facts. The facts is that you don't know who's next. And you know what? More than likely, we're probably wrong. More than likely, here's the thing. Realistically, you take all the exchanges that are out there, 90% of them, 95% of them are going to be fine. But the thing is we're trying to smell out who's got the most risk, who has the most red flags or the most signs to be the next. And that's it. And more than likely, crypto.com will be fine. More than likely, we'll proceed and we'll look back at this thumbnail and be like, remember when we talked about crypto.com going under? They never did. Like, good. I hope we have that conversation. But what I don't want to have is a different conversation 6 months from now or 3 months from now where we're like, man, there was warning signs everywhere. I wish I would have said something. Like, damn it, man. Like, you know what? Just play it cautious, man. Play it cautious. Chill.
It's just not worth it.
And also, what are y'all playing to get cautious by hitting this like button, man? Why aren't y'all hitting the like button? We got 50 likes. What are y'all doing?
All right.
So, have you noticed I'm not shaving?
No.
It's no shave November.
It's actually no nut November.
But I was waiting till the bottom came in. Once the bottom hits, I'm gonna shave. So you let me know when you think the bottom's in, and I'll shave.
Okay. Well, apparently, Sam Bankman-Fried's bottom's in.
If Bitcoin keeps dropping, your boy gonna look like came from Elder Scrolls, full beard.
All right. Okay. So, Salt. Okay, they have officially gone under. This is I believe it was an email from them. This is an important update to all account holders in light of recent industry events related to FTX. I'm sorry to report that the collapse of FTX has impacted our business. Until we are able to determine the extent of this impact with specific details that we feel confident are factually accurate, we have paused deposits and withdrawals on the Salt platform effective immediately. While our platform will recognize on-chain deposits, we strongly advise against depositing more funds to your account until we have communicated with you about all the specifics and can assure you of our plans moving forward. Now, Rocco, we were talking about this before the show. I hadn't really had any experience or really heard about Salt as far as like knowing exactly what their business practices are. Of course, I've heard of Salt, but Rocco was telling me they were the very first crypto lending platform, right?
Yeah, they've been around a long time. That's probably the first I ever heard, the way they were trying to loan by using your collateral, your crypto collateral, and
right.
the issues loans. About
it was
yeah.
the BlockFi before BlockFi.
Yeah, pretty much, yeah.
We're speaking of BlockFi, apparently they are filing for bankruptcy. Yeah, Liberty and Trust Assaults and Old Project. Yeah, so again, contagion, right? The problem is when you have something so big, a company as big as FTX go under, and they have, it's like saying, I don't want to compare to BlackRock, but BlackRock has their hands in a lot of different companies. They have their money spread out, and they have loans. They have loans out. They have money owed to them, and so if they go under, think about how many companies would be impacted. How many companies would have to cease their operations, and so FTX is kind of like the BlackRock of crypto, right? They bought up all these companies, they spent all this money, and now them going under, it's causing a massive ripple effect And again, guys, we're only we're only like 7, 8, 9, 10 days in. And this is just the beginning. And you got to assume some of these other companies that are affected, that haven't halted withdrawals, that haven't closed up shop, you got to figure they're scrambling right now. They're scrambling to raise money and they're scrambling to stay afloat. Chances are, with prices down, lending getting expensive, no VC firm, no big money is going to want to throw money into companies or crypto right now. It's too risky.
Okay,
And
so I mean, just think about it. Salt, you could assume with the trend and kind of the direction that all these other platforms go through after the halting, they're going to go file for bankruptcy, right? Pretty safe to assume. They file for bankruptcy, they default on their debts. And we know that these lending protocols, Celsius, BlockFi, they borrow money from other platforms, and then they go and lend it out to other. When I say they borrow big ass chunks of money. They borrow $200 million, $500 million, $100 million. Like I don't, obviously Salt isn't quite as big a name as BlockFi is, and Celsius is right now. Perhaps they were in the past, but still, it's safe to assume they probably owe a lot of people money. And that money is probably towards an institution.
So
yeah.
Guys, when I was taking finance courses, the biggest thing they talk about, as far as having power is compound interest, right? You make interest, and then interest makes interest, and then so on and so forth. It's a snowball effect. Same thing here. FTX causes contagion, Salt halts withdrawals, right? Now, everyone who has money stuck on Salt is screwed. So now that causes a snowball effect, and then it might affect another company that was part of the Salt ecosystem, and now they go under, and then everything that's tied to them goes under.
Okay. So what if Salt borrowed $200 million from Andreessen Horowitz? That's that is exactly what. Those are the big ones. Those are the big loans that have defaulted. That's why Voyager went under, because they borrowed $300 million. They owed $300 million. They went under because of that, essentially. Because they let Three Arrows Capital borrow $300 million, and then Three Arrows Capital went under because they over leveraged on Luna, and then FTX was borrowing to everybody, and so you're seeing this contagion spread. And you know what concerns me is not what other crypto platforms is. Will this spread to traditional finance? Because there is a lot of exposure to venture capital. And I ain't talking about crypto venture capital. I'm talking about hedge funds. A Canadian hedge fund pretty much got liquidated. They're going to end up going under. We have also, on top of that, you have Silvergate. Silvergate is the bank, the onboarding and offboarding bank that works with Gate.io, worked with FTX, worked with like all the banks. They even worked with Binance, but they ended up backing out. So Binance separated from Silvergate about like 10 months ago or 8 months ago.
So we do have a video on Silvergate, and we do have some news on Gate.io also.
Man, so with Silvergate, now what happens, here's the thing. What happens when people decide to cash out? And Silvergate has to fulfill the cash withdrawals for money they don't have. Right?
Yeah.
And then on top of that, you also have loans coming from Silvergate towards crypto platforms as well. And then as they default, they're just going to put more heat on the system. And so, guys, Silvergate is going to be a problem. Just letting you know that right now.
So, since you brought up Silvergate, let's go ahead and let's go ahead and watch the video on Silvergate, and then we'll kind of discuss it. I watched the first maybe 45 seconds, and then I wasn't able to watch the whole thing. So we're watching this same time as you guys for the first time.
And there's something else that came to my attention on Friday that I want to warn people about, and it's a stock, and it's called Silvergate, and it's symbol SI, and they're the financial so-called bank that allows all these transfers and things to happen. and they have about $14 billion with a B in deposits, and they're largely from these offshore entities. And get a load of this. They transfer last year $1 trillion between these offshore entities and customers. $1 trillion off a $14 billion deposit base. And this name was brought to my attention by who I think is the best bank analyst on the planet, and that's Porter Collins of the Big Short fame. And he thinks they're in the process right now of having a run on the bank. And they put out some bogus press release on Friday saying that FTX was only $1 billion of their deposits, and they didn't have any loans to them. And the stock went up after ours Friday. But as Porter said to me, it's a deposit story. It's not a loan story. If they lose all their depositors, there's going to be a run on the bank.
Yeah,
so
it's not just FTX either. So, I mean, that's the whole point. It's
not FTX. They do business with the worst of the worst. And the crazy thing is, these guys are so stupid at SI, right? The CEO's son-in-law was the head of risk, so they figured out something was wrong. And before FTX went bankrupt, this is what they promoted. It says, this is from their website. It says, life as a crypto firm can be divided up into before Silvergate and after Silvergate. It's hard to overstate how much it revolutionized banking for blockchain companies. And that was endorsed by Sam Bankman-Fried, founder and CEO of Alameda Research and FTX.
Nuts.
It's crazy. And they put this thing out saying it's only $1 billion of deposits. Well, if there's a run on the bank and the U.S. government wakes up or the Treasury wakes up and they start kicking the tires of this bank, they're going to realize they have no KYC on right now, which is know your customer, or they have no AML on right now, which is anti-money laundering, because FTX is a criminal operation, cut and dried. And if they were doing all this business for FTX, look at what happened to all the banks that did business with Madoff and things like that. So this is serious ass shit. And the fact that they put out a press release on Friday to try to hype their garbagey ass stock, you know, real guys reached out to me and said, can you believe this? And I said, it's absolute dog shit. So I am short SI. I think SI is garbage, and they need to be called out, just like FTX needs to be called out.
Wow.
He shares also my terminology for crap. Dog. Anyways. So, guys.
Damn.
Silvergate is they literally provide the on-ramp and off-ramp for everybody that's not Coinbase and everybody that's not Binance. Gate.io, Crypto.com. I'm not sure about KuCoin, but I believe they do KuCoin and Kraken as well. Hobie Global is done on and off ramps. So basically, when you cash out your crypto, when you go and do your ACH bank transfer and you go to cash out, you go to sell, it gets paid from the bank, from Silvergate, on those platforms I listed. And so if everybody goes and withdraws money because Silvergate is underwater, all their money that they're owed or debted from on numbers? FTX, it went out. They went under, bro.
What were the numbers? $1 trillion lent out, but only how much?
I don't know how much. Okay, if they lent out $1 trillion, here's just the most basic mathematics, bro. They lent out $1 trillion. The entire market cap of crypto is 800 billion. If that doesn't mean you're underwater, I don't know what else does.
Damn.
If you don't think this is going to spread to
has got to be the craziest week.
Silvergate does. They do have fractionalized reserves. So as long as everybody doesn't go and run and go and take their deposits out, and I think a lot of people are hesitant on selling their crypto position. One, for tax purposes. Second, because they're just degens and hodlers. They want to hold on to their Bitcoin long term. So you could find yourself in a situation where there's not a bank run, but there is an impending avalanche that is there, and it is on a cliff. snow is melting. There's sound effects going on, and there's a potential for it to crash. And on top of that, you have massive liquidations from the FTX side and all of their little companies that they also partner with. And they were in bed with FTX big time. And so they can always get bailed out by the government. But right now with inflation, I don't see it happening. And so the bailout's probably not on the table for that bank. But I don't think there's going to be a run on the bank. So for that reason, I think they'll be fine. But who the hell knows, man?
If Silvergate, if they go insolvent, man,
They literally process the fiat for everything. For everything. If it's not Binance or Coinbase, and they processed all the on and off ramp for Binance up until 10 months ago.
okay. Yeah, go ahead, Robin. Drop some olas. We got a lot of new people.
Got a lot of new people in here. All right. So if you're new to the chat, let us know so I can drop a hola. We got CG Bailan. We got Gail K. We also got Yasus S. Bro, my pronunciations today is terrible. We got Sauce
today,
Boss.
you mean every day.
GMH, Dynamic Crypto. We also got XRP Hitman. I think he's been here before. Yeah. Cigar, and then we got Only Me and Dione Gang and a handful of other people. If I missed you, sorry. But anyways, hola! Welcome to Sin City Crypto.
People like your shirt too.
Oh yeah,
It looks familiar. Looks like somebody face.
My favorite thing is to put the microphone down here on his face.
Hey,
forced liquidation, gate.io.
You're an idiot. All right. Let's talk about Sam. Sam the bank. Fried. He's fried. All right. Speaking of fried, we're getting fried in the studio, Robin. Will you turn the heater off, my friend? Thank you so much. Okay, so SBF, these cryptic tweets he's been sending, a lot of speculation. So as soon as the first P dropped, everyone was like, all right, he's going to tell us what happened. Some people were like, he's referencing Hillary Clinton's book. He's pretty much insinuating, if I go to prison, I'll talk, so help me, or whatever the case may be. Some people were saying he's trying to play the crazy card and showing that he's not all mentally there. And so when he does go to court, he can argue that, hey, my mental capacity, blah, 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 whatever, insanity, whatever that defense is called in court. So here's an update. So he spelled out what happened, and then he said, not legal advice. Well, no, and not financial advice. Well, no shit. I think at this point, it's safe to say,
He's trolling, bro.
You don't
He's
have
trolling.
to tell anyone that what you say is not financial advice. We're good. We're good. He said, I'll get to what happened, but for now, let's talk about where we are. To the best of my knowledge, as of post-November 7th, with the potential for errors include...
Oh, this is new. I haven't seen this one.
Yeah.
Okay.
Alameda had more assets than liabilities, but not liquid. Mark to market. Alameda had margin positions on FTX International. FTX US had enough to repay all customers. Not everyone necessarily agrees with this because it is fact. Because you're lying out of your teeth. FTX had enough to repay all customers. Then you say, not everyone necessarily agrees with this. Well, no shit. You stopped withdrawals. If you had enough money to repay customers, why did you have to stop withdrawals? Right?
Oh, yeah. Oh, yeah.
Oh, man. I swear to God, guys.
It is common knowledge. Okay. So the FTX headquarters that was in the Bahamas was in the same building, walking distance, or the same complex that Alameda Research was. It was common knowledge that funds were moving over from FTX over to Alameda Research. And it was also known by the top people in FTX that they were leveraging debt by borrowing off of their FTT. And if any projects they invested in, they had a requirement that they had to store, they had to keep their crypto if they invested in them. So basically, FTX would invest, say, $10 million into a project. They would require that project to keep the $10 million in FTX. And they would say, hey, this is Alameda's going to lend you the money, but we want you to be invested in with us as well, but we'll keep it in a separate company, FTX. So that way there's no conflict of interest. However, what they were doing, they lent out $10 million from Alameda Research. $10 million went to a project, and then the $10 million would be, they would use however much for development, and then they would take the rest of the money, let's say 8 or 9 million, and they'd put it in FTX, thinking that it was sitting there just straight up. Then from that point, FTX was sending it back to Alameda, and then Alameda was going and investing that 8 or 9 million into another company. So they're rehypothecating or washing their money, wash trading their money, and they're sending it out to another exchange or to another project, and then having them do the same thing. And because the venture capital company, which is Alameda Research, holds so much weight and so much power that, hey, if you want $10 million, you do what we say. Because otherwise, logic would be like, why would I give you my money back to hold back in there? But at the same time, you're at their mercy because you're trying to raise capital. You're trying to raise $10 million. So you're like, hey, okay, they'll give us $10 million. The stipulation is that we just hold it on their exchange. Well, little do you think that the exchange is going to go under. Nobody really thought that. And so that's how we got into the mess that we're in. And they just kept rehypothecating. And so for this thing to say that, hey, Alameda was 100%, everything was back 100%, that's a damn lie. That's a damn lie, bro.
Of course, that was a damn lie. Guys, this doesn't have anything to do with crypto, but man. So this is confirmed. A Russian missile hit Poland and killed 2 people.
Really?
Yeah. We might. All right, I don't want to talk about this, man. This is scary stuff. Okay, back to crypto. Shit. Okay, so this is from John Cardillo. This is so there's 2. You had this Giga thread by Jago Capital, and this one is massive. It talks about all the ties of like Sam Bankman-Fried. That was a family business. I'm talking aunt, brother, mom, dad, uncle, grandfather, girlfriends. It was literally just a massive scam that everyone had a hand in. So this is a short, essentially synopsis, okay? So a true scandal is opening for the Biden administration, and we're not sharing this. It has nothing to do with politics, okay? Well, for us, it doesn't. April 25th, 2019, Biden announces his presidential campaign. 13 days later, SBF, who is the son of Barbara Fried, who is a Stanford professor and co-founder of political fundraising organization Mind the Gap, launches the FTX exchange. So 13 days after Biden announces his presidential campaign, FTX exchange is born. The exchange is magically an overnight success. SBF becomes the biggest donor to Joe Biden. Election day, FTX implodes completely. If you think the scandal is done, it goes even deeper. Gabe Bankman-Fried, the brother of Sam, who was also a former Jane Street trader, is a founder of Guarding Against Pandemics. He was a legislative correspondent for the U.S. House of Representatives and an advisor to large political donors in the Democratic Party. The family, Aunt Linda Fried, Aunt Linda, okay, so this is the aunt, is a WEF member on the Global Agenda Council on Aging. The father, Joseph Bankman, is a Stanford professor who has lobbied on behalf of hedge fund managers before Congress, and I can verify that because there's video of it. He was more in the tax, the tax and liability side of things. FTX's head of ventures and commercial at FTX Ventures, Amy Wu, started with the Clinton Foundation years ago. Nishad Singh, who was the FTX director of engineering, had spent over $8 million for Democratic candidates. And I'll tell you what this all kind of leads to, okay? And finally, Obama's commodity futures trading commissioner, Mark Wetjen, was literally the head of FTX policy and regulation. Reports where the organization wanted to spend over $1 billion on the Democratic Party, which Sam Bankman-Fried did come out and say. So a lot of people are saying this is a money laundering operation. You also had news and rumors about money being sent to Ukraine, right? And FTX being the middleman, right? Because crypto was sent. Do you have more info on this, Robin? I believe part of it was crypto, part of it was money that was being sent from the government. It would be offloaded or off.
So there's loose rumors that Ukraine was active in a money laundering scenario. That I think might be a little bit of a reach, or at least there's a lack of evidence. But a lot of those funds, and even those, you remember when the Ukraine and Russia escalation first started, they had the wallets where you could send crypto, right? Yes. And so Ukraine was keeping their crypto, at least, I don't know how much of it, but a large proportion, if not all of it or most of it or a bunch of it, some of it, I don't know. But they were keeping a lot, billions of dollars worth of their crypto that was being donated, was being custodied by the FTX. That's gone. Think about that, man. Think about people that just donated $50. I mean, we donated $100, man. You know, and then somebody else in the chat, I think it was Russell, or I don't remember. Yeah,
it was Russell to give it back.
And so that donated $100. So the donations that were supposed to go to humanitarian efforts for refugees, I think at the time, at first there was a lot of civilians that were trying to get out of the country, and so a lot of the donations were to help facilitate the evacuation of civilians. At least that was what I was hoping some of the money was going to. I understand that when you donate, it doesn't always go to where the destination is supposed to. But for all of it just to get stolen by Sam Bankman-Fried, it just gets uglier and uglier, bro. I mean, David, do you think Sam Bankman-Fried just took billions of dollars from donation money to Ukraine and now is just sitting in Argentina or somewhere just spending that money?
Do I think he did? I don't know. Is it possible? Yeah.
I mean,
the guy's a scammer.
Ukraine was keeping their money on FTX. That's like a fact. And the fact is, it's gone. So I'm just saying that it's absurd to me to think that this dude is out here on the run. He liquidated the bank accounts, or somebody did, hacked it, and dude is he's nowhere to be found. It's embarrassing, bro.
Honestly, like I said, at this point, nothing would surprise me. Nothing would surprise me. If you're telling me he did it on purpose, it wouldn't surprise me. If you're saying he took the money and just cheated them out of it, wouldn't surprise me.
You know what does surprise me is the fact that do you think it's coincidence that FTX literally blew up and went under on election day? So basically, you can think of it this way. Do you think that people in Congress, Democrats particularly, because they're the ones that were the ones that gain, and this ain't political, I'm not trying to point Democrat does that, like I could care less, but the party that beneficiated the most, who gained the most from FTX financially, was Democrats. And it just so happens they're trying to go for re-election. They're getting a ton of capital injected into the Democratic Party. And all of a sudden, they keep the company propped up. FTX basically just hobbles all the way through. And then all of a sudden, boom, as soon as the election is over, they go under. Do you think that there were some regulators, some policymakers that was keeping the company afloat long enough just to make it to election day?
Yeah.
Especially if they knew that they were going to be dragged through the mud. Because think about all those commercials that slander, all those campaign ads.
Yep.
What do you think what do you think those commercials would have looked like if FTX went under a month ago?
Right. Yeah. That's a good point, Robin. That's a good point.
It's not coincidence, bro.
That's a good point.
I'm telling you, somebody knew what was going on inside. Somebody was like, yo, FTX ain't who you think they are. The same way, if Ben, a YouTuber, I'm not trying to discount Ben, but if Ben, a YouTuber, is sitting on his platform, be like, yo, FTX is not who you think they are. They are way different than you think they are. All kinds of red flags. Dude is corrupt. Dude is evil. Like, you think if he knew, you don't think politicians knew? Because Ben got his information straight from politicians. And so if politicians knew, why the hell didn't they say nothing? And you know why they didn't say nothing? Because they were sitting there like, all right, bro, election day is a month and a half out. FTX, no bueno. We got to keep this hush hush because I'm tied to this. My partner's tied to this. That politician's tied to this. Like, just keep them afloat just a little longer.
Shout out to Blockchain's Day for the $10 super chats. I love the content. Keep it up. Thank you so much, my friend. We appreciate it. We love the content also. That's why we keep bringing it to you. We're going to get into some prices and charts here in a second, but staying on this whole FTX, who had their hands in the pot, money laundering scheme for the Democratic Party. Of course, this is all speculation, but, you know, just so you guys know, you know, one of my friend's dad was a detective, and they literally, they're taught to not believe in coincidence. And so when you have multiple things lining up, you can say, okay, one thing, maybe it's a coincidence. Two things, maybe that's a coincidence too. But 4, 5, 6, 10. Then you start digging into who's who. What were they doing? What was their relationship? It gets a little foggy. And so here's one piece of the puzzle that I want to share is the Oxy token, right? Oxygen Protocol, which was one of the big tokens, the illiquid tokens that were on Alameda's balance sheet. So this is from this Jago Capital thread. Oxy token is down from $4 to 0.03 since going public. Their core team consists of big banks like Goldman Sachs, JP Morgan Chase, Bank of America, Alameda, of course, FTX. And this thing just completely from $4 to 3 cents. So here's more news that, like, think about it this way, you guys, okay? Just think, and you know me. You know me. I like to break things down. And if you don't know anything about cryptocurrency, right? And you're new, you don't know stuff about blockchain, just break it down to its more fundamental level. The thing that is just plain and simple, right? Easy for anyone, or you can explain this to your grandma. If you're sitting on information, right? If you're a crooked, let's say, boxer, and you're like, all right, I'm gonna lose. I'm gonna lose this fight, and I'm gonna tell every one of my family members to bet their life savings on the other person. And then you lose, you take the fall, and then they get money. So what Sam Bankman-Fried essentially was doing was they were funding projects and saying, hey guys, VC firms, JP Morgan Chase, Goldman Sachs, help us out with regulation, and we will make you 500x on your money guaranteed. And how do they do this? By manipulating the markets, by pumping up the token price, by getting FOMO to come in, listing it on FTX, and then pulling the rug from underneath it when everyone exited their liquidity. What are your thoughts on that, Robin?
What were we talking about? Sorry.
All right, let's move on.
I was chatting with the producer, sorry.
All right, so it was Oxygen Protocol. And then you have this Gabe Bankman-Fried, which was, and I'll swap over to my laptop here. This was his brother, of course, ties, and then you had his aunt, Linda Fried, who was a dean of Columbia, and also she was on the WEF's global agenda, which Sam Bankman-Fried and FTX were front and center. And yeah, so let's take a pause. Let's take a look at what the crypto markets are doing, what the prices of crypto is. So I'm going to send it over to Rob.
All right. So As we mentioned, we do got Bitcoin coming in at 16,700, kind of the same zone we've been at since we had the FTX debacle. Remember, we did go as low as 15.5, and so it seems like 16K essentially would be support at this point. I mean, you could sit here and say that, maybe 15.8 or 15.7 would be the major support, but I think at this point it's safe to say 16K is probably support. If we do trade under 16K, we'll probably bounce right back up.
Hold on.
So that's Bitcoin.
Hold on.
What's up?
Did you hear about what Kevin O'Leary said
What did he say?
about Sam Bankman-Fried?
Not sure. I watched half of that interview today.
Have you seen this?
I saw the first half.
Listen to this.
I didn't watch the second half.
Listen to this.
If SPF knocked on your door again and said, look, I failed in my last venture. I have a new crypto venture. I need money. Would you back him?
That's a great question. No one's asked me yet. I think we can all admit, you can love him or hate him given what's happened, but he was one of the most brilliant traders in the crypto universe. He also built one of the most robust platforms. We used FTX actively. It was a very robust platform that allowed us to get information on a compliant basis. So I really like what he built.
Would you back him?
The answer would be yes.
If SPF knocked on your door again and said, look, I failed in my last venture. I have a new crypto venture.
This
I
dude
need money.
literally was.
Hold on. Go back to the video. Go back to the
That's
video.
the same one.
Question no
It
one's
just
asked
replays
me
it.
yet.
Oh, he did?
I think
Okay.
we
My
can
bad.
all-
Sorry.
So
I
yeah,
thought he
just
kept
for
it.
it's on repeat. And here's the thing: this dude literally,
I have no respect for this dude anymore. Done.
he literally was the catalyst. SBF was the catalyst for
Everything.
For
Three
okay.
arrows, Luna. I mean,
So
everything
Luna. Here's the
comes
thing.
back to
here's
this
the
guy.
Thing. Here's the thing. He might not have realized what was happening. He might not have realized the implications or the effects of what was happening when he got into Luna, right? This is what. Okay, so the same thing I was saying. Okay, so when you say Sam Bankman-Fried is the best trader, he's the best risk taker. And you know what? He arbitraged Bitcoin through it was called in Asia they had like the Bitcoin I forget the name of it, but you can basically as an exchange or a trader you can I'm gonna come back to this. Let me research. I'm gonna come back to this. But what he was doing, he made his money off of trading on Bitcoin. And then he built the platform, got a bunch of money. But what they did with Luna was that they were taking money from Alameda, they were putting it into Luna, and then they were borrowing money from other people. So they were borrowing. So there's like a three-way circle. You have Three Arrows Capital, and you have Alameda, and then you have Luna. And so they were lending money out to Three Arrows Capital. Right? And they're like, here's some money. And then Three Arrows Capital was putting it into Luna. And then they were going and getting another loan and they were borrowing from each other. And all the while, they're all generating revenue from Luna. So it's just this circle.
Arbitrage.
Yeah. And so, hey, I'll borrow money from you and then I'll put it into Luna and I'll generate passive income, 20+%, and then I'll borrow more money from you. We'll put it in Luna, get more money, and then I'll lend that money that I got. I'll lend it out to somebody else like Voyager, and then they can go do the same thing. And anyways, they just kept injecting more and more capital into Luna, and they kept hypothecating more and more funds, and they just kept driving up the price of Luna. And eventually it collapsed and they lost all their money. Three Arrows Capital lost their money and they lost everybody else's money that was tied into it. And that's why as soon as the Luna token collapsed, they started printing FTT token to basically pay back some of their loans they couldn't afford or to borrow on new loans because they didn't have any capital and they were going to go under. and then
Guys,
you literally caused this, and like, come on, man. What is Kevin O'Leary saying, man?
you know, and
Why would he
Naked Canadian, he said, well, you got to take it into context. He mentioned something about, well, he could have said, but I want to be in the driver's seat. Why would you want to be associated with someone like Sam Bankman-Fried in any capacity? In any capacity. Like, I had a respect for Kevin, and that's gone. And if he ever comes on our show, I'll straight up tell him, like, yo, man, when you went on Crypto Banter and you said that you would invest in him again, I lost all my respect for you, man. And,
that
Make you feel
says,
better. I never had a respect for this guy, but it's okay. That's my opinion.
it just says that,
Flip-flopping like that.
no matter how shady you are, this is literally what he said. So no matter how shady you are, no matter how many people you screw over, it doesn't matter if you hold funds that are supposed to be in a humanitarian effort for another country and you just steal those. It doesn't matter how crapped your morals are. If you're a good trader and I can make some money on you, I'll invest in you. Doesn't matter. You know what? You might have caused this whole collapse. You might have stolen funds from refugees. You might have just lied to everybody. You might have been the dynamite that blew up the dam. But hey, you know what? If you knock on my door and I can make some money because I know you're good at making money, sign me up, man. That's hella disrespectful, man.
That's
you know
super
what? You might have made your money from being a cutthroat businessman, but you know what? At the end of the day, man, money.
there's a difference between being a cutthroat
man.
businessman and being a felon, a frauding people, right? You can make money, every transaction is a buyer and a seller. You can make money off sellers, but when you're frauding people and you're literally a felon and you're committing felonies, it just doesn't make sense. Huge shout out. Liberty and Trust said, appreciate the work. $10 super chat. Little something to keep the lights on. We appreciate it, my friend.
Okay, let's get some
Crypto meetup in Vegas soon.
Yeah.
Yes.
and
Crypto
hit the
meetup
like.
in
We don't
Vegas
even
soon.
have. We got like 30% like ratio here. What are y'all doing? Y'all don't like this video?
Listening in the background. The listening. Listen.
Hey, you better open up that app. Hit that thumbs up button.
That's right. All right.
Okay, guys, let me know in the chat. Do you think that Kevin O'Leary is speaking some truth here, and maybe at the end of the day, Sam Bankman-Fried?
Stop it. You can't even get the words out of your mouth, bro. Just stop it. That's a terrible one.
One in the chat, but okay, I want to know what people say. If you're disgusted with Kevin O'Leary's statements, put a 1 in the chat. If you ain't vibing with what he said, put a 1 in the chat. If you're upset and you don't know why the hell he was saying it, put a 1 in the chat. If you think that it's all business as normal, you know what? Sharks be sharks. Put a 2 in the chat. If you don't think it's that big a deal, if you don't think that's that big a deal, and we're trying to do some cancel culture BS here off of what he said, put a 2 in the chat. If you think he crossed the line and ethics and all that jazz, and you're like, what the hell are you saying, man? Put a 1 in the chat.
Also, XRP Hitman, $10 super chat. We appreciate it. Thank you very much. Yeah, you couldn't even get the words out of your mouth, bro. That was.
I know my number though.
Yeah. What's your number?
Right now.
How much money will buy you, Robin, Rocco? Who knows? All right. So there was rumors that this dude had the nerve to still go out and try to raise money. And I believe it was in Asia. SBF, who was presumed to still be in the Bahamas, reportedly spent the past weekend in talks with investors, considering funding the $8 billion that the company owes its traders and institutional clients, but to no avail so far. FTX's bankruptcy case currently includes more than 100,000 creditors. 100,000 people or entities that they owe money to, with the bulk being trading customers who are now stuck in limbo. FTX could receive a loan that could go toward maintaining its operations, which is known as a debtor in possession financing, which does have to get court approval. So part of bankruptcy, you are allowed to still raise money to keep your business going, especially if it's Chapter 11 and you're trying to restructure. And the messed up thing is this, you guys, and you can't tell me that what I'm about to tell you doesn't go back to the scheme they're trying to run. So when you raise money after you file bankruptcy, that money you raise goes at the very top of the list. It goes above secured creditors. It goes above everyone, right? It leapfrogs everyone. And so imagine the manipulation that they could do with raising money as part of the debtor in possession financing, and who they would raise that money from, what kind of payment system will they unlock? I mean, right? I mean, maybe I'm looking too much into it, but hey, crypto is mostly a big Ponzi scheme. There is definitely some Ponzi schemes out there, but I would say a majority, if you stay inside the top 100, I think a majority of the tokens are definitely not Ponzi schemes. So, all right, but I can understand why you would say that. And then this article goes on to say, if they want any FTX assets, they'll just buy them at bankruptcy auction and not have to worry about the liabilities. This is what, who said this? This is what securities lawyer James Koutalis told Blockworks, that he put the odds at like 0.0000001% that anyone would invest in them.
I'll say there's overwhelming ones in the chat.
Well, I would hope so.
Yeah, there was some twos though.
Couple twos.
Haven says 2. Nobody's judging your 2. Isaiah did 2 as well, and then Jesse M did 2. Prep Brett, but
Jesse said, "Truth is, if Sam Bankman-Fried could have raised money, a lot of capital would have stayed, and they would have survived." But why would you want them to survive after everything that's come out?
I think he's saying that if he would have raised capital before the implosion. Yeah, right now.
So just keep the scam going.
I mean, that's what they're doing. You know, I heard an interesting take that, if the FTT token would have 2x'd, they could have cleared all their leverage. And so, I'm sure they did it during the bull run several times, right? They probably try to generate revenue. They're probably like, hey, let's just borrow on the FTT token. And they probably did that. Because I'm sure this isn't the first time. Like all of a sudden, they were just like, "Hey, you know what? We're because of the Luna collapse, let's try something new." Perhaps they did, but my anticipation is that if you catch somebody stealing, they were probably stealing long before that one time you caught them, right? And if FTX is borrowing money off of their own token, and they probably shouldn't be, or we know they shouldn't be. Then they've probably done it before. And if they did it during a bull run, all you do is you lend it out, and then as soon as the price goes up by 30%, you put a 5x leverage on it. Boom.
That's it.
Loan paid off. And then you pay off your loan, and then you made a bunch of money. And then,
you do the same thing. Then you do the same thing.
Yes.
But what I'm saying is that they have already done it. I'm sure they've already did it.
Yeah,
I'm sure they executed it many times.
The sum would have gotten larger. They would have taken more customer money.
But the thing was, if we weren't in a bear market, if we weren't in the depths of the bear market, if Luna didn't happen, they probably would have just kept
because of him.
Yeah, well, yeah, but it would probably they could have hypothetically gotten out of it. Now, would they have ended their practices and been like, okay, now that we got out of that hole, let's never do that again? Like, I'm sure they're like, oh, well, we did it once, we did it twice, we did it 5 times, let's do it again. So
I won't be surprised 3 years from now, 4 years from now, with the next bull run, and then in the next bear market after that, something else is going to come up. Because every time Mt. Gox, Bitcoin Net.
Why don't you show your face, Rocco?
Yeah. All the time this stuff happens always in cycles because they take advantage of the system and there is no clear. And they know all the loopholes and how to manage all this money. And I won't be surprised. The next one, 3 years from now, is going to be even bigger than this one, unless there is some clarity in there.
With every major financial collapse or every big company that screws people over, the more users and money that's in the system, the more it affects people. And if this were to happen in 2017, the market cap was 10% of what it is now.
Yeah.
Or not now, but at the height of the market. The same thing could be said for back in 2012. And so the next 4 years from now, it's not going to be a $1 trillion market cap. It's going to be a $9 trillion market cap. And there's going to be 8 or 9 times as many investors, institutions, and agencies, hedge funds, all going to be intertwined. So if something like this happens again, which history always repeats itself, maybe just in a new packaged up way, then there's going to be more people affected. And, you know, until there's some kind of clarity when it comes to centralized entities, I feel like people aren't learning the lesson. You know, crypto's created so that way you can remove the centralized entity, remove the third party from making money. Why is wire transfer so trash? First of all, it takes 5 days. Why does it take 5 days? Second of all, you're paying like 3 different entities to transfer the money. You got a bank here, a bank there, and then an intermediary, and everybody's making money off of your transfer. Just outdated. It's done way more efficiently. And so I don't know where I was going with that, but
Okay.
All right. So the regulators, right? Regulators chimed in, and here's some of the things they had to say about this whole FTX debacle and what we can expect moving forward. And so Senate Banking Chair, which this is complete BS, warns crypto could crash our financial system following the FTX collapse. Senate Banking Committee Chair Sherrod Brown from Ohio is sounding the alarm on crypto following FTX's collapse. This year, we've seen cryptocurrency values collapse by $2 trillion. He goes on to say that's $2,000 billion. Wow, thank you for that clarity, Senate Banking Committee Chair Sherrod Brown. Did you know $2 trillion is also $2,000 billion?
did you know that there's 4 quarters in a dollar?
No way.
Yeah.
10 times. That's crazy.
Did you know
he
they
said-
were all sent before?
Yeah. He said the parallels to past financial crises throughout our history are troubling. Hold on. The last thing we need is for risky new financial products to crash our financial system. Oh, yeah? Well, explain mortgages back in 2008. Explain 2000. Explain the 1970s. Explain the 1920s.
Or why don't you explain 3.5 multiplied on the money printed and how you siphoned all of that into the top corporate Americas? Literally, you made the entire world a little bit poorer. You made every country worth less. You devalued every single, because we're the baseline currency that everything trades on. We printed so much money. Why would you print 3.5% of the money? You multiplied. Like, I don't know how many billions. I think they printed like $6 trillion or whatever it was. I don't know the number off of my head. It was almost 4 times the amount of supply got injected into the system within 2 years.
Bro, how are you going to say a 3 trillion at the height?
That's not a...
At the height, a 3 trillion market cap sector is a financial risk, but you printing all this money is not financial risk. Canceling student debt and printing money to cover that is not a financial risk.
Financial risk is the dollar, bro. That's where I'm getting at. Financial risk is the dollar, because I know if I set $10,000 aside for my kids, my son and daughter are 9 and 10 years old. If I decided to set $10,000 aside for them for college, and I just didn't touch it, I just put it in a savings account, 10 grand. How much do you think that would go towards a college education? College right now is about $40,000 to $60,000 for a 4-year degree, right? How much do you think it's going to cost for college in 9 or 10 years when my kids get to college? It's not going to be 40 to 60 grand. It's going to be 100 to 400 grand, right? And what the hell is my $10,000? Right now, it'll pay for a quarter of their education. It'll get them 25% of the way through. But at the rate that we're going with this trash ass government's monetary policy, is that it's going to cost $100,000 to $400,000 for an education 10 years from now. And what is 10 grand going to do? And so if you want to sit here and talk about crypto being a scam and you're a
risk to the financial institution?
risk to the, you know what's a risk? The dollar's a risk. That's the biggest risk in my mind, because literally I'm just looking at it like from a perspective of like my family and kids, and what am I going to do for them with my hard-earned cash? How do I pass it down to them without it being worth dog crap when they're old enough to receive it?
Well, this guy, Sherrod Brown, is not the only one who weighed in. You had the Fed weigh in as well. So Anthony Barr, who's the head regulatory person in the Fed, said this. We are also concerned about risks in non-bank sector, including crypto. It would be useful for the Fed to provide guidance to banks to safely custody crypto assets. He said firms that operate outside regulatory perimeter can cause enormous problems. Now you got the Fed chiming in. And I want to focus on the middle part right there. It would be useful for Fed to provide guidance to banks to safely custody crypto assets. Robin, let me ask you a series of multi-part questions, okay? Do you think we need massive retail adoption for crypto to blow up like we want it to and like we expect it to?
I mean, if you're gonna get adoption, you're basically
These are kind of short. Just keep
that's what
them
I'm saying.
short.
If you're getting massive adoption, then obviously you have massive amount of people.
Okay. And do you think massive amount of people are more comfortable with their banks that they've been banking for 10 years, or with let's say an investment firm or something they're not really?
People, yes, but what people really want is convenience and ease and security. And so convenient, ease, and security, if it can be done with a phone, a tap, or whatever, as long as people don't want to write down 24 seed phrase words. People don't want to custody their own stuff and have it at risk of being gone if all of a sudden the maid is cleaning the house and throws away your ledger. Like, people just want... No, there's stories of the housekeeping coming in and throwing away your USB.
Oh, this looks important. Garbage.
Yeah. Or your kid. I mean, your kids ever go through your drawer, like the random drawers in your house? You know that drawer that has
I'm not laughing at you. I'm just laughing at just like.
You know that drawer that you have where you just put random stuff.
Junk drawer?
The junk drawer.
Yeah.
I feel
why would you keep your ledger
there's some degens out here that keep their ledger in a junk drawer. And anyways, so people just want ease of convenience, man. And so I think it's either going to be, people are either going to keep their crypto in a bank or it's going to be on their phone. It's going to be one or the other. The ledger thing makes sense. A USB makes sense. But if you're talking about the entire there's people that I used to work with. Think about, we used to work at a restaurant back in the day. Think about the people that we worked with. How many people in that environment, if they all got into crypto, how many people do you think would keep their crypto or their money, or all their money on a ledger?
1%, maybe.
Yeah. So it's gonna be ease of convenience. If you're saying that retail is gonna pile in, which they will eventually,
and you agree that we need them to pile in.
Yeah.
Okay.
So it's gonna be on the phone, bro. It's gonna be on the phone.
But what do you mean on your phone?
Because that's the easiest thing. That's the thing that you have.
Okay, but there's got to be
that's
an app.
the thing that you
or
have.
a wallet.
Well,
Yeah, it's going to be a wallet on your phone.
Okay.
like Apple.
Or on your bank account, when you log into Chase Bank, you're going to have checking, savings, investment, credit cards, and then cryptocurrency.
Yeah. That's coming. That's coming.
Yeah.
And then here's the thing. It can all be made easy and fast and efficient by using your phone.
Well, of course, because
that's how we do it now. Yeah, it's the same thing that Apple Pay right now just moves. Apple Pay moves money from your bank account to the vendor via your phone, all encrypted.
But let me ask you this question, okay? And this is an interesting conversation. And chat, feel free to chime in. Would you say that that's necessarily a negative thing? Let me preface it by saying where we're at right now, okay? Where we're at right now with these centralized exchanges, if we keep going the way we're going and big changes are not made to how they operate and how they're regulated, can you argue that custodying your crypto at a bank that is fully insured and backed, that's been around, is better than using a centralized exchange? Can you make that argument?
At this moment, yes, but centralized exchanges are they will eventually.
They're shadow banks. They are shadow banks.
Okay.
Centralized exchanges are shadow banks.
You have banks that are legally. You have crypto exchanges that are able to run like they're supposed to in other countries than the U.S. because the regulators aren't quite as hesitant to lay out guidelines. Now, you ideally would like to set up in the U.S. because we're the world reserve currency, we have the strongest economy, and there's the most oversight. So, as a retail investor or just somebody that has exposure to crypto, you probably have the most ease or the most comfort if you had a publicly traded company in the U.S. that was also regulated by the SEC and had nothing but transparency and compliance from top to bottom. And I think that if you're going to have a centralized entity, that's how it should be done. Now, all I'm saying is that SEC just focus on the exchanges, leave crypto alone, let crypto market evolve and do its thing, and then just focus on the exchanges. Get them to be transparent. Let them come in, be publicly traded companies. Let them do their thing, and then that's it. And Crypto J Baby says he prefers MetaMask. And yeah, cool.
Yeah.
Use whatever you want. And the thing is MetaMask eventually is going to be on your phone too. I mean, it already is on your phone. But, obviously, like, it's still, you got to do the seed phrase thing. If you lose your phone, you got to find the seed phrase to pull it back up. And so the retail, they ain't gonna be down with that either.
Guys, whether you like it or not, let me explain something to you, okay? If you're watching this channel, I'm assuming a majority of you have been in crypto for a little bit of a while, a year, 2 years. I'm assuming a majority of you understand hardware wallets, how it works. You understand custody your own crypto. You understand DeFi. You have a better knowledge of the average person that's coming into crypto. And we can all agree that we need the average person to come into cryptocurrency for it to blow up into a 50, 60, $70 trillion market cap sector of the financial world, right? You want banks to start custodying crypto. I know it sucks to hear. I won't hold my crypto with the bank, and you probably won't hold your crypto with the bank. But guess what? Trust is absolutely eroded right now. No retail investor is going to go put money in Coinbase. No retail investor wants to start investing right now for the first time in Bitcoin. No one is. I'm sorry. But guess what? If Bank of America comes out and says, hey guys, we are now going to, we can now custody your Bitcoin. You can buy directly through our app. We will hold it for you. You don't have to worry about a seed phrase. You don't have to worry about a wallet. You buy it and just keep it there. And you can access it whenever you want. And we've been around for 200 years. We're fully regulated. We have compliance.
I got a question for you, David. Okay, so normally takes about 4 days for your money to hit an exchange, right? For a bank transfer. Let's just give a round number. Let's say 5 days, because sometimes it does take 5 days. Say it takes 5 days. Say you, David, you want to buy some crypto, and you go and you onboard $1,000, or say $10,000. You onboard $10,000 onto an exchange to buy some crypto, and then on top of that, you make your exchange. You put your order in, whatever. It's in there for 3 days, and then you take 5 days to take your money off, right? So now you have exposure for 2 weeks. Would you feel comfortable using an exchange like Crypto.com right now? Do you think that there's a possibility they would go under in the next 2 weeks?
Crypto.com?
Yeah. You think there's any glimmer of possibility they would go under in 2 weeks?
Of course there's a possibility.
Okay. So now, if you decided, hey, I want to buy some crypto.
Not likely, but possible.
Let's just say that you want to buy some crypto. Say you're looking at Polygon's price right now. You're like, you know what? I want some Polygon. And you could buy it from either Crypto.com or Bank of America. Those are your two options. Who are you going to pick?
So Effin Book says, why are you cheering regulation? I'm not cheering regulation, okay? Because I understand this space and I understand what I need to do. I get it, right? Banks can halt your crypto. They can restrict access to it. They've done it in Canada. They can do the same thing if banks come in. I'm just saying it's inevitable. It is inevitable, guys.
Doesn't matter. Okay, let's just say this. Regulation for centralized entities, centralized parties, exchanges, and lending services, cool. Let's regulate them, man. Honestly, sure. You want to use them? Go use them. But here's something you can't regulate. You can't regulate Bitcoin. You can't regulate Ethereum. You can't regulate decentralized platforms. You can't. You physically can't. Go try to halt a Bitcoin trade on the base layer. It doesn't matter. It literally does not matter. If I want to send David, even if he's sanctioned, it doesn't matter. If I want to send a Bitcoin, I can. Nobody can stop the internet from sending my Bitcoin to David, vice versa. Now, whether or not onboarding, that can be a little, or offboarding, that can be a little different, but you can't regulate crypto. And so if you just think of it that way, it's just like, hey, you leave crypto alone, because essentially, if it's decentralized, there's no regulation to even put in there. It regulates itself. That's why you have the consensus mechanism. That's why you have proof of work. That's why you have proof of stake, because that is the regulation. There's no regulation needed. But when you have people and not code and protocol that are in charge of crypto, people can be nefarious. People can have bad intentions. Not everybody, but hey, you put 100 people in a room, you let them all borrow $10,000, and you say, hey, nobody spend this, and come meet up here in a month and give me my money back. How many people in that room are going to come back with the $10,000 and not spend a dime of it? I'm sure that half the people, when they come back, probably spent it. And of those half of the people, they're going to have some excuse. Well, my mom got sick, and like, okay, it doesn't matter the premise. The fact is that you're giving people risk, and they're going to always have a motive, whether it's nefarious or if it's because they felt like they had no other option. People are always going to take advantage if they are in a position of power, and you have to regulate it. And so to sit here and say you can have an exchange, 10 exchanges, 100 exchanges, and all of them are holding billions of dollars, and you don't expect any of them to be nefarious or steal, you're losing the premise. People are always going to take advantage. And that's why you need regulators when it comes to people. But the protocol, you don't need it. And so if you're passionate about crypto and you're passionate about not having regulation, it's there. It's in crypto. You don't need to use the platforms that need to be regulated. That's it. You can go to a Bitcoin ATM, you can put some money out, and then you can withdraw and put it in your hardware wallet. Boom, done. 5 minutes, just like that. You take your cash, you put it into it, you can put $1,000 into a Bitcoin ATM. And then you get your address, you literally send it over to your hardware wallet, boom.
Have you done it before?
I have not done it before.
I have not done it either.
I've not done it before.
No.
But I've seen my buddy Carl used to he bought a lot on ATM.
Yeah. You know what, guys?
Let's go do a video.
Let's do a video.
3 of us with a camera in a gas station and see if we can make it out.
Like you don't have to play around in the centralized world. But the fact is that the centralized world is here. Institutions are here, and they're going to make money off of retail. And the retail people that don't know what they're doing, they're going to pile in and they're going to use these services. And if nobody's holding them accountable, they're going to take advantage of those people. And the last thing we need is for this market cap to grow to 10 trillion and then have half of the money just disappear to some guy who's on a jet on the way to Argentina. And then over here trolling everybody on Twitter by typing out what happens with one letter at a time. Like, we don't need that again.
And also, what it pissed me off that everybody knows, all the people in Congress, they start to point it out that they need to regulate crypto when this doesn't involve crypto really. That was a collateral problem. This is an old system in plain sight. So where they're using the scam, but they use crypto as an excuse. But that's nothing crypto to regulate. There's no crypto related. They just did in a way that it looks like it's crypto. Now everybody pointed out we need to regulate crypto. There's nothing to do with crypto. All the loans, all the faulty, all the scam, all the little shell company, there's nothing to do with crypto. Just my opinion though.
It doesn't. Crypto.
Now they pointed out the crypto, but
the crypto protocol and centralized companies that offer crypto services are two completely different things. That's like being mad at the internet because Google got your info. Like, look, the internet's great. It's connectivity. It's information that travels around the world at the speed of light. And you know what? Crypto's the same thing. Crypto's a technology that facilitates payments and moves value around. Don't be mad at crypto because the platform that people decided to use had no accountability. That's it.
And Corey Laurie brought up a good point. Bad actor is going to come regardless. That's 100% true. It's 100% true. If you have a bad bone in your body and you're a fraudster, whether there's regulation or not, you're still going to find a way. So I'm just saying, for the masses, guys, it's something that we're going to see. All right, let's move on. Let's talk about Gate.io. So Gate.io is an exchange in China. They're pretty big. They are the other half of the $400 million debacle that Crypto.com faced, where they sent $400 million to Gate.io and then got sent back, I believe, only like 85-90% of it. CEO of Crypto.com has come out and said, hey, it was a whitelisted address, blah, 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 blah. We fat-fingered it. Well, some news has been uncovered about Gate.io, and they might be, one of the next ones to fall to this contagion. So it starts with Zach XBT, who's a pretty big on Twitter. He goes in there, he looks on chain, he looks at wallets. He puts great stuff together. So he calls out Gate.io for keeping a 2018 hack under wraps. So apparently North Korea hacked Gate.io for about $230 million, and it was swept under the rug and it was kept hush hush. Obviously, Gate.io survived because they're still here now. And then there was an audit in October from this Armanino, which we've seen has done, I believe they've done Huobi, I think they're doing Crypto.com, and they've done Nexo as well. And so Proof of Reserves agreed upon procedures report. And this Twitter handle right here, versus Bitcoin, points out some very, very interesting facts. Says the audit was limited to Bitcoin and ETH. And I read the actual report, and it's fact. Doesn't talk about stable coins, fiat, altcoins, what they're owed, what they're not owed. And so this is what we've been saying. This whole, we're doing proof of reserves. We're hiring a third-party audit company. Guys, numbers can be skewed. What can't be skewed is on-chain statistics. And if those on-chain statistics are not shared in these reports, then how are we going to confirm? How are we going to verify, right?
But here's the thing. Even with on-chain statistics, if the on-chain statistics say I have $1 million worth of Bitcoin, but I have half of it leveraged out in a collateralized loan, then I don't have $500,000. I don't have $1 million worth of Bitcoin. I have $1 million sitting on my platform with a downside risk of losing half of it if my loan defaults. And so this proof of reserves, okay, it's the right direction, but it doesn't give you the whole picture. And so you guys can sit here and say like, hey, let's self-regulate, let's let this figure it out on your own. But let me tell you, somebody's going to take advantage of the system. They're going to see loopholes. And in the future, this will happen. You think Sam Bankman-Fried is going to be the last guy that this happened to? This happens every cycle.
Yeah, but what people are saying is even with regulation, this stuff
regulation
happens.
doesn't fix everything.
Yeah,
because you have regulation. You have regulation in traditional finance right now. There's regulation now, and you had regulation. You had Enron. You had regulation. You had the banking collapse. You had the housing collapse. So it's not a fix all, but the fact that FTX, Alameda Research, and Sam Bankman-Fried got to do as much damage as they did for as long as they did without any accountability, without anybody even like asking like, yo, where did you get all this money at in 3 years? Like, how are you the second biggest campaign donor, donating more money than pharmaceutical companies that are some of the richest in the world, and you literally started your exchange through, in 2017, right?
Yeah.
And then they were nobody until I didn't really hear about FTX until 2019, 2020. I was like, oh, okay, these guys are something cool. Like, I mean, dude,
100% naked Canadian. It is a human element that is destroying it, not the tech or the idea or DeFi. 100%. It is people who are taking advantage of other people. They are ruining the image of cryptocurrency, blockchain, and what it can possibly do.
And here's the if you would have asked me before this whole debacle, maybe on the run up, I'd have been like, you know what? No, leave the exchanges alone. They'll figure it out. Like, you know what? It's just at this point, it's like we've pushed back because of this FTX thing. We've pushed back our crypto space at least a year. Adoption at least a year back. Now, you can say maybe we sped up regulation, which will be beneficial for the whole space. Maybe, I don't know. But the thing is here's the thing. If you're scared of regulation, just stay into Bitcoin. Stay into decentralization. Stay into XRP. Stay into Cardano. Stay into Ethereum. Stay into Bitcoin. And boom, you don't have to worry about regulation. You can buy and sell and work on dApps and borrow on your own crypto. And you probably turn a good profit too. And so regulation doesn't scare me. If I want to avoid it, I'll just circumvent it, and that's it. Like, we have the power to do that. So,
you know, just to show you guys, okay, just to instill a little bit of confidence in you that blockchain has not changed, right? These companies are still going to use the technology that powers cryptocurrency. Okay, this is a map chart here. Look at these names: Apple, Facebook, Google, Ford, Toyota, British Airways, Prudential, Alibaba, Tencent, FedEx, Maersk, UPS, Samsung, Walmart. Look at all these things, all the use cases blockchain is being used for: data protection, transportation, data integrity, healthcare, supply chains, trading. So although things might seem bleak right now, and we're actually we're giving a presentation to some of the top CFOs. One of the companies, for example, is Zappos here in Vegas. We're giving a presentation on how blockchain can solve some of their problems. And I'm telling you guys, don't fall for the FUD of people saying crypto is dead. There's no way. There's too much Ponzi stuff going on. Crypto is never coming back. That is absolute BS. Nothing that has happened this year, nothing that has happened a year ago, 5 years ago, 10 years ago, changes what blockchain and what cryptocurrency can do for not only businesses, but for human beings as well. Yeah. Let's take a look at some Bitcoin and crypto prices. So I'm going to send it over to Robin. Robin?
all right. And so just a refresher here, we got Bitcoin coming in at 16.7. And as far as Ethereum, sitting at $1,250. So not too much movement. Kind of everything's kind of flat here. The markets were up. Here, I'll take a look. Yeah, I was looking into that Russia. That is factual, by the way. That missile.
It did hit, right?
Yeah, but it was right on the border. It was right on the border of Ukraine and Russia, and they had fired a bunch of missiles into Ukraine. So one went astray. Not to downplay it at all, but just saying, it's not like they attacked Poland. I guess it would be my
right
counter argument. Anyways, NASDAQ up 1.28%. The PPI, which is the producer price index, which follows the price of wholesale goods, came in 0.5% more favorable than was to be expected. PPI is a great measure of the supply chain because you're seeing what the baseline cost is, not the consumer's cost is for goods. And so that came in pretty well. So I might, as crazy as it sounds, might get a favorable Fed rate hike coming up next month as well.
Guys, we're doing a FOMC extravaganza, December 14th. You do not want to miss our live show. Everything FOMC. We're going to bring guests on the show. We're going to do TA. We're going to talk about what we think, what 2023 is going to look like as far as the Fed and
we got stacks up as well, 15%. This is a lot of partnerships with Stacks. I don't know if they got a new partnership today, perhaps. But they do. They have the idea of running Bitcoin smart contracts or smart contracts on top of the Bitcoin network as a layer 2, So kind of interesting utility there. Quant chilies are up. XRP's up as well. And then, yeah, that's all I got there.
All right, so let's do some TA. Let's take a look at BTC. So Bitcoin is currently sitting at $16,840. It is in this this symmetrical triangle pattern here, which these 50-50, upside, downside, kind of depends on, and this is on the 4-hour chart, by the way, kind of depends on kind of the overall feel of the market, I would say. But we did see a big move to the downside. We are not necessarily seeing higher highs, which would put us in a bear flag pattern. We're not seeing that, but symmetrical triangle, I like to go down to the lower time frames. Let's hide these drawings and let's take a look at what Ichimoku tells us where we are as far as a trend. So if you're not familiar with this, a Japanese charting technique that kind of gives us a sense of where the trend is. So we are currently sitting above the cloud, which is bullish. The lagging indicator is above price, which is also bullish. Cloud is green. And we see the conversion line is above the baseline. So this is bullish. So if we were to take probabilities and also on the stochastics, we are closer to oversold than we are close to overbought. And volume is staying steady. So if I had to take an educated guess and say, all right, where do I think this symmetrical triangle is going to play out? I would say chances are it will break to the upside. If I get rid of this and we throw this back on and we kind of try to figure what price range or what target can we expect Bitcoin to break out to, I would kind of assume it would be close to 8-9%. And so if we break out over the next few hours and we take 9% from this level here, we're looking at a over $18,000 Bitcoin. So something to look out for there. And then, guys, Polygon-matic, I want to swap over to some big news with Polygon. Sponsorship after sponsorship continues to come out. They have sponsored with the largest sneaker company in the world, Nike. Their announcement on November 14th that Polygon Nike's Web3 initiative and their experiences will be exclusively on Polygon. And if you remember, in July, Disney picked Polygon. In August, Coca-Cola picked Polygon. So Polygon continues to make massive partnerships. And this is what I'm saying, guys. These companies, they might not be investing in exchanges. They might not be investing in projects. But what they are investing in is they're investing in the future. They're investing in blockchain technology. And that is why when we say during these times, have your money in solid projects. And I can't think of a more solid project in terms of continuing to build relationships, continuing to bridge the gap between Web 2, Web 3, traditional companies, Web 3 companies than Polygon right now. Robin, do you agree?
Polygon for sure. Yeah. All day. We have a new Sam Bankman Fried tweet.
We do? Go ahead and pull that up.
And we have and finally, I sincerely apologize. I'll keep sharing updates.
Man, get out of here, bro, with your half-ass apologies.
I do want to give a quick shout out to the chat. We got some new people up in here. So if you are new, say hello so we can drop an hola. We got Dynamic Crypto, Bobby G. We got Joshua Scott, Catman, TFJ, Brunman, Francois, Poe. And we got Piranha Cards, Siri J Fu, Darren, JB, we got Computer, Gail K, Be the Only One, Armzilla, Jose Pereira, Darren A, Catman, Dean D, we got Luna Siestin, Jose Piera, we got JX Diaxon, and then I have a note in front of me so I can't see the rest of the names, but also got Leroy 49, Crypto J Baby, Quentin Raider 96, Crumpton, Stephen Friend, Nikki P, Crypto Burntown Music Group.
Oh my God, this is okay. Hurry up.
Hola! Welcome
Jesus
to
Christ.
Crypto. There's a lot of new people here.
I know,
man.
but you can't pronounce.
Trying to give love here, man. Trying to give love.
Sounds like my 5-year-old trying to split out 5 words. So JR said, wasn't Polygon investors in FTX? No, it was actually the opposite. FTX invested in Polygon, but Polygon not really affected. There was also some confusion with Ledger X. And guys, Ledger X and Ledger are not the same company. Ledger X was acquired by FTX, but they are not. They're a derivatives platform. They're not Ledger, the hardware wallet. So that's squashed. Ledger's not in trouble. All right, that'll do it for the show today. Make sure to go check out all of our social media. Go follow us on Twitter at SinCityCrypto1. Check out the merch store and subscribe if you haven't already. And on your way out, like the video.
We got a Discord run by Mark.
Yes, community ran Discord. Go and join that. We were in there talking extensively last night, 2 nights ago. So hop in there, guys. Follow us. With that being said, Rocco. Friends, family, friends of family, and family friends. We thank you so much for tuning in to another Sin City Crypto Live. Make sure you come back tomorrow at 10:30 a.m. Pacific Standard Time. We love you guys. On behalf of myself, Robin, and Rocco, we will see you tomorrow. Take care. Peace.